All right, you moved to Florida, you filed your paperwork, you think you're done paying New York taxes. But then you get that letter. New York wants proof. They want bank statements. They want credit card receipts. They want to really know where you live. In this video, I'm breaking down the 3 biggest mistakes people make when moving to Florida for tax breaks. These mistakes trigger New York audits. They cost people fortunes. And by the end of this video, you'll know exactly how to protect yourself from an audit that can cost you hundreds of thousands of dollars in back taxes. Let's get into it. I'm Santiago, Cueto, board-certified international business law expert and best-selling author based right here in Miami, Florida. I work with clients every single week who are making the same exact move from New York to Florida. Some do it right. Others end up in audit hell. The difference comes to understanding what New York is really looking for. Filing a change of address form isn't enough. New York doesn't care about your intentions. They care about your actions. And they have an entire division dedicated to catching people who claim they left but actually didn't. So let's talk about how to protect yourself. First, understand why New York cares so much. If you're a high earner, New York could be losing hundreds of thousands in annual tax revenues when you leave, maybe millions over time. They're not going to let that go easily. New York has what's called a statutory residency test. You're a resident if you maintain a permanent place of abode in New York. You're also a resident if you spend more than 183 days there. It sounds simple, but it's not. You see, New York has a domicile test. This one is even trickier. Domicile is where you have your true home, the place you intend to return to, the place where your life is centered. You can have multiple residences, but you can only have one domicile. When you're a high net worth individual leaving a tax state for a no tax state, New York is going to scrutinize everything. They're going to look at your life, your patterns, your connections. They're building a case, which brings us to mistake number 1. Mistake number 1 is keeping too many ties to New York. I see this constantly. Someone buys a beautiful house in Florida. They update their driver's license. They register to vote in Florida, and they think they're done. But then they keep their country club membership in New York. They keep their New York doctors. Their kids stay in New York schools. Their spouse spends most of the year in New York. Their business relationships are all New York. New York looks at this and says, "You didn't really leave. Nice try." Here's what they're really examining. Where do your kids go to school? Where are your doctors? Where are your dentists? Where do you have memberships? Where is your religious affiliation? Where are your professional licenses? Where do you maintain safe deposit boxes? Where are your personal items? Where are your heirlooms? Each of these is a connection. Each connection is evidence where your true home is. The more connections you maintain in New York, the stronger their case becomes. You need to systematically move your life to Florida for real. This isn't just about where you sleep, it's about where you live. Change your doctors, move your valuables. If you have a spouse, they need to move too. New York will use your spouse's location against you. Don't give them that ammunition. Now let's talk about mistake number 2. This one trips up even the most careful people. Mistake number 2 is not tracking your days properly. Remember that 183-day rule I mentioned earlier? You need to spend less than 184 days in New York to avoid statutory residency. Sounds easy to track, but it's not. New York counts any part of a day as a full day. You fly into JFK in the morning, you fly out that night, that's a full day in New York. You drive through New York to get to Vermont, that's a day in New York. I've seen people lose cases because they miscounted by just a few days. They thought they had 180 days in New York, but the audit showed 185. Game over. You need a contemporaneous log. That means you track your location every single day in real time, not at the end of the year when you try and recreate your movements. Keep your calendar, keep your credit card statements, keep your Easy Pass records, keep your phone location data, keep your flight records, and keep hotel receipts. New York will demand all of this in an audit. If you can't produce it, they'll make assumptions, and those assumptions, guess what, won't be in your favor. I recommend my clients keep a detailed spreadsheet. Every day gets logged, include where you woke up, include where you went to sleep, include any travel between states. This might sound excessive, but when you're facing a 7-figure tax bill, you'll be grateful that you did it. Now, if you're finding this information valuable, do me a favor and hit that like button. It helps more people discover this content. And subscribe to my channel because I break down complex legal topics like this every single week. Now let's talk about mistake number 3. And this one catches even sophisticated people completely off guard. Mistake number 3 is not establishing clear domicile in Florida. Moving to Florida is only half the battle. You also need to abandon your New York domicile. Abandonment requires intent. It also requires action. Here's what New York looks at. What's the value of your New York home compared to your Florida home? If your New York home is worth $3 million, your Florida place is a 1-bedroom condo, they're going to question your intent. Where do you spend your holidays? Where is your family buried? Where do you have active business interests? Where are your most valuable possessions? The biggest mistake I see is people treating their Florida home like a vacation property. They buy a nice place, but it doesn't feel like home. The furniture is sparse, there are no family photos, the closets are half empty. Then they keep their real home in New York, the place with all their stuff, all their memories, all their important documents. New York will argue you never really intended to leave. You need to make Florida your center of gravity. Your best home should be in Florida. Your important documents should be in Florida. Your valuable possessions should be where? That's right, in Florida. Now here's a bit of advice. File a declaration of domicile in Florida. This is a sworn statement that Florida is your permanent home. It's not dispositive, but it does help. And update everything. Your will should be executed in Florida. Your estate planning documents should reflect Florida domicile. Your trust should be administered in Florida if at all possible. You want to create a paper trail that screams, I live in Florida now, because New York will look for any excuse to pull you back. Now here's the bottom line. Moving to Florida for tax reasons is completely legal, but it has to be real. You can't just rent a condo and call it a day. You need to genuinely relocate your life to Florida. New York has the resources to audit you. They have the motivation. They're sophisticated. They're aggressive. They win more cases than they lose. But if you do this right, you can save enormous amounts in taxes. We're talking about going from a top rate of nearly 14% in New York to 0% in Florida. On $1 million income, that's $140,000 a year. That's real money. That's generational wealth. Just make sure you're not cutting any corners. The audit risk is real. The potential liability is massive. So if you're planning this move, getting proper legal advice is critical. And if you're already in the middle of it, getting proper legal advice is even more critical. The cost of doing it wrong is exponentially higher than the cost of doing it right. If this video helped you understand the risks better, make sure to like it and subscribe to my channel. I post content on business law and tax strategy every single week. I'm Santiago Cueto, your Florida business attorney. Be sure to watch more of my videos right here.